Everyone, how is everyone today? Happy first of the month. We've got a lot going on this month, which hopefully should bring some excitement in the markets. We're going to take a big overall look at everything and just try to get an idea of where we should be headed from here on out before we jump down to smaller time frames and look at what may be possible for the day. So before we get into that, if you are new here, welcome. If you are returning, welcome back. It's good to see you guys here. Be sure to smash up that like button and hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. We do these videos 3 days a week on this channel. Covering the Tuesday, Wednesday, and Thursday Asia session open over the dead gap period to get an idea of what we can potentially trade on the best trading days of the week. So hello to everybody who is here. What is up in the chat? Carrie, Romit, Eric, Lana, Aman, Ryan, who else have we got here? Rata, Julian. Good to see so many of you guys here. Feeling a little bit low mood this morning, but let me do my best. Let's get into this. Now, what you are seeing on your screen is a mix of everything that we should be looking at every day, even if we just want to trade crypto, because the fact of the matter is that crypto, excuse me, is heavily influenced by what is going on in the stock market right now and the larger world economy. So we don't really have a choice. If you're going to make a trading decision, you really need to look at everything. So let's start down here at the Dixie, because this one has most of my attention this week. I feel like, especially on the 4 hour and even the 1 hour, the levels in Dixie are pretty clear to me. I can definitely see an M formation here with a level 1 drop right here on this massive red vector candle here, and then a level 2 drop on this one here. And now we're kind of at the stage where, is this part here a level 3 drop, because it did come right into that vector that we had marked out from last week, and it didn't actually attempt to eat into it completely. So it could be that that is the level 3 drop, and this is the left side of a potential W forming, which would not be great. So it would look something like that is what we kind of want to keep an eye out on, especially the fact that we have this vector candle right here. Usually, yes, you do mark the wicks. I'm just going to mark the body of this one just for the sake of being able to point it out clearly. But if we were to get some kind of a shape like that, then that is overall not going to be good for anything else that we are trading, unless, of course, you are wanting to pick things up cheap. Then it will be a perfect time to do that. The other thing too is that of this candle here, the 50% line of that candle is usually the first thing that we look for as price starts to re-enter a vector zone. I'm going to make this nice and big for you. As price comes back to re-enter a vector zone, we're always looking at the 50% line initially. So, well, not really. We look at the bottom initially. Once it breaks through that, we look at 50%. Once it breaks through that, we look at a full recovery. At any of those points is where we're looking to see the price break through for continuation or reject for a retracement. So the moral of the story with this particular 50% line and why it has my interest so much is that it also lines up basically on par with the 200 EMA. Now we do have a contraction of these EMAs, so it's kind of lining up with the 200 and the, excuse me, the 200 and the 50 at the same time. That's not the bigger deal. The bigger deal is the fact that it's kind of lining up with the 200 EMA. We do have on the 4 hour 2 dojis at this point in time. So this is a really critical part for me. Like, I want to see, is price like going to fail here? It does seem to be struggling over the last 8 hours at this point in time. But are we going to head down because we just can't break through, or are we going to get some continuation and start to make an attempt to recover the entire candle? So that's what I would be looking for. If we do break it down, then going to see if we do get that W formation, then we will know that this is just a retracement and Dixie's actually going further to the upside. If we don't get if we break down but we don't get a bounce, then we're heading back into this 4-hour vector, which we didn't touch yet. And eventually at some point in time it will, but we just don't know if that time is now, and that's what we need to watch for. So 2 things there. Now the final part of that, of course, would be that we do break through it and we make an attempt for the top of the candle at the very least. Again, that's not going to be great, but we need to keep an eye on all of those things. It really does give us a very good hint of the direction of everything else. So Dixie is the number 1 thing to watch, in my opinion. Now, if we go back to all the other charts, we can see here, just zooming out quickly, the S&P in the middle here is in its vector candle zone, a major vector candle zone. That's a fairly big one that is just sitting under its 800 EMA and just above its 200 EMA. So we, at this point, do have a full recovery, but we're coming back for a retracement. So need to watch if, if that's going to reject or break through next. Going to give you a hint of everything else. And then also NASDAQ, same thing, attempted its major vector candle on the 4-hour time frame, but we do have one failure here at the bottom of that candle. We do have another failure here at the bottom of that candle. Then we have a lower high. So that is not at this point in time particularly good for a continuation to the upside. However, at the same time, we have higher lows the entire time as well. So you can't really call it when you have that. You pretty much have to wait and see. One of those things has to break. It's going to either finally break through on the next attempt to the upside, or we're going to create a lower high. That's when you have a direction. Anything in between there, you are just guessing. So now that we have a bit of an overall picture, another thing I wanted to remind you of, I'm so sorry. Number 1 is if you've been on this channel for a while, you will know that sorry, I just got distracted by comments in the chat. You will know that we have talked about the Bitcoin halving dates and what that means and how we time when the bottom should be in according to the Bitcoin halving. At this point in time, this is the only model that hasn't broken with, everything else that's going on in the world. But the only reason it hasn't broken is because of time. So we simply have to wait. And this is the ultimate test of patience, that word everybody hates, but that is what it is. So according to these halvings, the bottom is usually in it's around 500 days before the next halving. And so that puts us somewhere, that puts us in this month, to be honest with you. So if the bottom is going to be in for Bitcoin, it should be this month. And we talked about previously this RSI slope bleed. At this point in time, let me just expand this so you can see it. See how we have the RSI is having a little bit of a peak above right there. That doesn't really mean all too much because it's only Tuesday and this is the weekly time frame. So we need to see if price does come down this week, that will reverse and come down as well. So we want to actually reassess this RSI at the end of this week or the beginning into next. It's going to be a pretty good one to watch. But this should be the month. According to the halvings, if this is not going to break, this should be the month. Yes, thank you, Mark. Smash the like button, please, guys. Really helps me get these videos around the internet whilst we are live. So really appreciate if you could take 2 seconds to do that. So keeping that in mind about the halvings and the fact that that means that November should be the month where the bottom is in. Does that mean the bottom is already in or there's more to go? We don't know, but we don't care. But timing wise, it should be in, whether it's already in or there is another low coming. In addition to that, we have been following this S&P everything, S&P and Nasdaq. We've been following this pattern on the weekly time frame for quite some time. And last week when everybody was getting really excited, saying the bull run is in, I was like, just be careful because this could be the level 2 retracement before a level 3 drop. And as we can see, the weekly candle right here from last week closed exactly on the 50% line of this red vector candle right here. At this point, again, only 2 days in, but does look like we are forming a rejection. So again, make or break week for S&P on the higher timeframes when you zoom out. When you couple that with the fact that we've got so much happening over the next week, we've got, let's actually have a look at those before I go more into detail with this. We have got today, JOLTS job openings. That is going to be a market mover. These are Melbourne time, 1 a.m. You can go to forexfactory.com/calendar and you can go up here to change the time zone to your own. Sorry, if you want to know when these are on in your time zone. But we have JOLTS job opening later on tonight in Melbourne time. We have FOMC press conference and federal funds rate on Thursday. And then on the 8th, I believe it is, which is next week, but basically in 7 days, is the midterm election. So this is a huge week. Like, it's huge. And I personally, I don't know if I would attempt to swing trade the method this week because there are so many news events that will take things out. Could definitely be a scalp week, could definitely be a day trade week. Be very careful of swing trading this week. Or sit on your hands, really, which I know no one's going to do, but sometimes that's the best thing to do. So when we keep in mind that we've got all of these things coming up, then we come back to here, we have to wonder if one of these things has they have the potential, but is one of these things going to be the thing that sets off this final drop to the downside? So just be very, very careful. I know that the markets look bullish with a pullback right now, but there's too much coming up to call it. And I know a lot of people are calling the bottom in already. I personally feel that's irresponsible to do at this point in time when we haven't had some very significant things happen, being the midterms, being FOMC. Sorry, guys. And so, yeah, I'm not going to be one of those people that does say that the bottom is in. I think we need to wait and see what is going on. Maybe reassess next week. We'll be a little bit surer that potentially the bottom is in, or we can see where it's going to be at the very least. So that's that one. And then NASDAQ is in a very similar situation on its weekly as well, where it hasn't come back to the 50% line of this vector here on the weekly time frame. But at this point in time, it is a rejection under the 50. It's actually a rejection under the candle completely. So yeah, just caution. But at the same time, this to me is a perfect time to be cash heavy. Hopefully you've been saving your profits all this time and be ready to deploy, basically, because we get one final level 3 wipeout, it's probably going to be the opportunity of a lifetime. So it might not sound good, but your future self will 100% thank you if you are on your toes. Oh, I'm so sorry. I don't know why I'm coughing because my cough is actually gone. But anyway, here we are. Now, what else do I want to talk about before we get into the actual lower time frame price action? Let's have a look at high block first. We can see this is done off 7 days. Now, let's have a look at 12 hours actually. How about that dodge run after the Twitter deal confirmed? Crazy. This month meaning October. No, it's November. It might be still the 31st where you are, but it is the 1st of November over here in Australia. We start at first because we are legends. So I am meaning November, to be clear. Now, all right, what have we got going on? Let's expand this because it's not that clear. We actually have a lot of leverage in the market on a recent time frame. If you have a look at this, it's a little bit crazy. But we've got a lot of levels here. All of these green levels are worth paying attention to. There are the high level here at 21,050 for to the upside. However, And that doesn't mean much to me when I'm looking at these ones down here that are closer to price at 20,650. And then below price, we've got 20,175. Sorry, is a very big level. And then around 20,075. And then we've got deeper levels down here back into the 19 and a half kind of zone as well. Looking at the liquidations over here, we're looking fairly thin. This fake move Monday was very, very obvious yesterday. We're actually really kind of lucky. We don't get them that obvious. This move up here was definitely fake move Monday yesterday, and a perfect spot to open shorts. And look how much leverage that wiped out here now that we can see this big white zone. And obviously some people were onto it because they did pick up short positions. And below price, we do have probably this level here is fairly significant, sitting at around 19,900 is a significant level if they wanted to keep driving price down. There's a significant level of leverage there they could wipe out. And then also at 19,470 is another one. The delta is kind of neutral. So caution. You guys know now that if that delta is sitting around the zero mark, that's when the market maker has to work their hardest to induce people to take trades so that we can build up one side. So what does that mean? That means that probably going to have volatility and you're probably not going to have clear levels. So that really just kind of, what's the word? It gives weight to what I was saying earlier about I'm not sure I would swing trade this week, if anything, only day trade, because it does show that we will, we potentially have fake outs both sides every day, but you can 100% day trade those if you are on the ball. Swing trade, it may take out some of your stops. So just be very careful about that this week. We kind of want to see a direction chosen with that delta before we try to hold on to trades overnight. Now let's have a look at the heat maps. One thing that was interesting to me earlier was this level down here at 20,050. That lines up with the liquidation heat map level that I just pointed out. There is some fairly significant large long orders at that level. I'm just waiting, I guess, and hoping the price comes back down there. So sorry. What else have we got? I mean, it does have to get through all of these first. So that's, not saying we're 100% going there. It's just a significant level. If we do head down further, I would definitely keep an eye on the $20,050 region. Above price, I don't see anything massively significant, but I do see 20,600 as an area to keep an eye on. So if we go back to our chart here, let's mark out 20,600. And that is going to put us towards the top of this recovery. Now, this is a 15-minute time frame. So it's going to put us towards the top of this. Now, let me actually draw fibs on that whole move. I thought so. That's going to line up with the 61.8 fib level, which, is a fairly significant level for retail traders wanting to take shorts when they're fib traders. So definitely a level to watch out for. See if Asia sets the initial high of the day around there. That could be, if you're not already short, that could be a good area to short. You may not get that lucky. We may not get up that high because we do have yesterday's low of the day sitting at 20,500, which also lines up with the 200 EMA. So I'd kind of make that whole maybe $100 range your target to open up shorts should you get some rejection candles in that zone. If price breaks up any higher, then I wouldn't be opening shorts. That would be a reassessment for me. Let me actually zoom out on Bitcoin and let's have a look at the overall pattern, because this one actually started on the weekend. Let me just have a look at the 1 hour, see if it's a bit clearer. No, I like the 15-minute right now. Can you tell me what software you are using for these charts? Yes, this one right here is called Trading Light. There are links to all of this stuff in the description of my videos. So this one is heat map software called Trading Light, and this one is highblockcapital.com. And yeah, again, you can get discounts and stuff like that if you use the links for them in the description of my video. Or even better than that, if you just join us, a membership with Trade Travel Chill, not only do we post all of this stuff for you every day, but you also get access to all of the education, and you can learn this method in full. And bonus, I sound like a salesperson on TV. It's actually cheaper. It's cheaper than buying all of these subscriptions separately. So you may as well just come and join us in Discord. So anyway, back to what I was talking about. 15-minute time frame was that the peak formation was formed over the weekend. Somebody asked me in the Discord if I see a setup on a weekend, knowing that we're in the weekend trap, would I take it? And my answer was, sometimes we do get the peak formation in the weekend. And if you see a setup that follows all your rules and it looks like it's, definitely going to play out, you take the trade. However, come dead gap zone, as soon as we open Sunday, 5 p.m. New York, that's when you have to reassess your trade. And you might decide at that point to close it or hold on to it because you've got a really good entry. So no problem taking trades on weekends. It's more of a rejuvenation thing, in my opinion, than anything else. So with this one here, I do think that we definitely have our M formation that formed over the weekend. And actually, the 1 hour shows this. I'm sure it shows this one better. 1 second. Yes, here we go. So we can see here, because we have less noise, this is the M formation here, which just continued to bleed down. This is our retracement, and this, in my opinion, is level 2. So I am expecting another drop, a level 3 drop. The only problem that we have that may cause that to not play out is the fact that we're between the two EMAs. So we're between the 200 and the 50. So on the 1 hour time frame, we really don't want to see price get back above the 50 EMA. If it if it does, then we have to reset, and we're expecting that it is a run up. If we break to the upside, we're expecting that it is a run up before the JOLTS job opening tonight. So just be aware of that kind of mess that may happen. But if we can stay under that 50 EMA, then I would say that we're going to get a level 3 drop that will hopefully come back into this zone, which has not been recovered yet, somewhere above the 800 EMA, sitting at around 19,800. And that's going to take out that leverage that I showed you here. So yeah, if the model plays out as the model's meant to play out and the news does not get in the way, oh my Lord, which chart was I on? Then we should have one more drop coming, in my opinion. But keep an eye on that 50 EMA, because when you know that we're leading into a news event, we know that that's where games get played. Markets are closed on weekends for market makers only. Yes, that's true. I'm confused why you don't trade on weekends, as BTC trades 24/7. Sorry if this is a dumb question. It's not a dumb question. It's actually very relevant. So the only reason, it's not that we don't trade on weekends, it's that as a trader, you need balance in your life, because if you're just watching charts 24/7, then you have to understand the market maker is not doing that. The market maker is only working 8-hour shifts. And so they are mentally in a much better position to make decisions than you are. So if you trade 12 hours a day every single day, then your mind gets cloudy and you can't make good decisions. So the weekend is family time. It's time to do things that are fun, that you enjoy. Like, you've got to have some time off. And the weekends are the perfect time to choose to do that, because with the market maker being away, then that means that the volume is going to be much, much lower. So if the volume is much lower, then your trades are going to take a hell of a lot longer to play out. So you might as well just not. You might as well just have it off, and you can make up for it much easier during the week when we have a lot higher volume. And then the other thing too is, because the market maker's not awake, like we know the market maker's model, right? We know the levels, we know the M's and W's, we know the trade setups. But on a weekend when you're only trading against algorithms and retail, it's unpredictable. So there's a higher chance that your trades won't play out because you're not playing against anything that is rational. So again, helps to increase your win rate if you stay away on weekends. So that's the main thing. It's not that you can't. It's just that most of the time you'll probably find that you wasted your whole weekend on when you could have been doing something else. So hopefully that explains that. Now, just very quickly want to talk about Ethereum before I let you guys go, because last week I talked about how we had this inner trend line here that a lot of retail traders would have drawn, and they would have had this breakout and would be super, super excited waiting for a retest, right? However, what I pointed out was that we had this bigger one up here that they were really considering, which goes back to the actual bull market high and would lead to our next touch on it if we rejected under it. Plus, it lines up with the 200 EMA. And that is exactly where price went to at this point in time. So again, I don't personally see a reason to call bull market. I certainly don't see a reason at this point to call the bottom in. It may be in, but we don't have confirmation yet, and you call it when you have confirmation, in my opinion. So just major caution to everyone because of where price is right now. The price has rejected under, let me make that nice and big for you. Price has rejected under this vector candle right, or around 50% of it. This vector candle right here. So it's struggling at this point in time, but it could just be because it's going to pull back into this candle right here and then make a move to the upside. Fantastic. That would be great. But that's what we're waiting for if we're going to expect further upside. Until then, we are still technically higher time frame bearish. So if ETH comes back now into around 1500 to say 1350, and we get a higher low, that's good for more upside. There's definitely a short between now and then, however, but that would be good for potential more upside longer term. However, if we break right through that candle, then it's likely that we're going to come back into this zone down here because, this zone right here between 1120 to 1000 even, we'll just call it, because it will have this candle as the final one to recover. But yeah, we're waiting to see if we're going to get a higher low on a higher time frame before we can get excited about any further upside, which, may 100% be taken out this month. On that note, just to throw some quick astrology at you, even though I know you hate that on this channel, but you don't mind it in the Discord. Kind of a nothing week is expected this week. Then 8th is expected to be terrible, which I believe is midterm elections. And then after that, rebound, nice for 2 weeks, then end of week bad again. So let's see how that plays out. I like to follow it because I find it super interesting and, kind of get a bit of a heads up in advance, and then you just see if it happens or not. So a bit of fun there. Now let me have a look at ETH on a smaller time frame. Now that we kind of know where we're going, higher time frame. So ETH, same thing, very obvious Monday fake move to the upside. Then we just came heading straight back down. ETH looks like it's struggling actually a lot more than Bitcoin, which I usually find quite positive because ETH usually makes its move first. And it's a more significant move. So definitely prefer trading ETH. But if we have a look at this, ETH has not even made it to the halfway mark of this vector candle right here that it printed last night. So that's one thing to watch, but the 50% line is at the 200 EMA. So if we get a move up to there and we get a strong rejection, that could be an area to open up a short if you're not already short. Otherwise, at this point in time, we've got 1, 2, 3 attempts at yesterday's low of the day. So that doesn't look great. That does look like we're potentially going to come back down to around the 800 EMA. It's just a matter of how far do we retrace before we do it. In my opinion. And the only thing that would make me think, okay, this move to the downside is over is if we get back above that 200 EMA and we can hold it, then I'll know that all we've got going on, in my opinion, is a run up pre-jolts and then potentially a sell-off after. So just be really, really careful of that. All right, guys, I'm going to leave you there. I think I've chewed your ears off enough. Thank you for putting up with my cough. I don't know why. I think I have to move out of the country. I'm fairly certain that it's where I live. But hopefully that will happen in my future. Enjoy the rest of your day. Hit that like button if you learned something. Hit subscribe as well if you're not already subscribed. And play it safe, and I will see you guys tomorrow.